We'll come back to you shortly, but we also have Vinay Paharia, the CIO from PGIM India, joining us on the show. Vinay, hi, this is Anisha this side. Good afternoon. Thank you so much for making time. Wanted to begin by asking you your market outlook in terms of how the valuations stack up versus the earnings growth that we have seen in the quarter gone by.
Hi, Anisha. So I think jumping straight to valuations, definitely the valuations currently are at a premium and are seemingly capturing most of the fundamentals for the next 6 months to 1 year. So we have actually borrowed some returns from the future, and hence for the near term we are a little bit cautious purely on valuation reasons.
Good way, Vinay, which you always do, borrowed returns from future, essentially saying that returns will normalize from here on. In the last 3 years of CAGR, say suppose a fund is given 25-30% or even individual stock, the next 3 years could be meaningfully lower. So expectation that similar performance gets repeated may not be a great idea. Tell us, which are the areas where you would be tempted to trim profits out of? I'm not even talking about your fund, I'm talking about the overall market landscape. Which are the areas which warrant trimming?
In fact, Ajay, we have done recently a study of the market which tells us that weaker quality companies, which means companies which have got lower than average return on equity and companies which have got lower than average revenue growth, have actually delivered significantly better returns compared to their good quality counterparts. And I think that's an area of concern, and I would be very cautious. In fact, would want investors to stay clear of these kind of companies, and the opportunities actually lie in the good quality companies. And good quality companies are ones which we define as those which have better than average revenue growth and better than average returns on equity.
Interesting point. I would love to look at the details of that study, Vinay, how the lesser quality companies have delivered more returns and how it's probably time to go back to the good quality stocks. But talking about the good quality stocks, it's financials, which is called as, the blue chip of sorts. The credit growth has been strong. The asset quality is pristine as compared to what we have seen historically. Why are the stocks then not reacting? What do you make of the underperformance of the private banking names?
Yeah, I think that's an area of opportunity, to be very frank, because there are lots of good quality companies or private banks, for example, or NBFCs, which have very strong structural growth ahead of them. These are the companies which have much higher than average return on equity, and they have clearly been stable businesses. So I think we are clearly overweight private banks, non-bank financial companies, and see this as a great source of opportunity.
So let me talk about certain areas of the market where the general consensus is that there are structural tailwinds. Then some of the companies are coming out with great numbers as well. So I want to talk about engineering and power transmission engineering, that kind of space. So what happened was 3-4 years, if you look at the landscape, everything got re-rated. Capital goods index itself went to a decadal high, and then things scaled back. Large cap as well as mid and small. Large cap has languished after that correction, has perhaps not come back in the same fashion. But mid and small, say a transformer rectifier, which is up 15% today, say a power, just naming for example purposes, these stocks have come back. Would you be cautious on this pocket? Or because the numbers as well as narrative both are kind of strong right now, you would still consider them investing worthy?
I think I would be extremely cautious within the mid and small cap space, because this is a space which is filled with landmines. There are exceptionally good quality companies. There are gems in this space, but this also has a lot of landmines. And I think many of these weaker companies or landmines are having been activated now. Investors need to be very careful, especially in the small and mid cap space, because I think the performance of all of these companies, especially starting from 1st of April of this year, has been far ahead of fundamentals in many of the cases. So I think that's an area of both concern as well as opportunity. And It's a stock pickers market out there in this space.
Hold your thought, because actually numbers for Titan are out and they look better than expectation. The profit figure has actually come in at 940 crore versus the expectation of 860 crore. It's the jewelry business that has delivered a 19% growth. The watches and wearable segment, a 32% growth in terms of the income. And if you look at the commentary coming in from the management as well, they are talking about that the festive season in Q3 has started well, and they are optimistic about the performance in the rest of the financial year as well. So the commentary coming in from Titan is also quite strong. They're also talking about how the store expansion in key market is progressing well. They're retaining their focus when it comes to the improving market share as well by launching differentiated products as well. The stock is seeing a bit of a spike. It was already seeing a up move of almost 1.5% to start the trade with, and now it's building on to gains 2.5%. I think the interesting bit also will be to watch out for the margin performance, because growth was something that they had given out in their provisional numbers already, but margin will be the key to watch out for, and we'll wait by to get more
Plus,
details.
of course, don't forget outlook for the next 2 quarters, because the ongoing quarter and the next one will capture bulk of the Dhanteras and all of that. Even what went by? What was that?
Dashera, Navratri,
no, the other
Ganpati.
one.
There's just too much.
Yesterday, which was the most important
Halloween?
one.
No, I don't know what was yesterday.
I'm talking about whether. There are a lot of festivals lined up.
Karwa Chauth.
Yes, that's the one. It was,
Your wife wouldn't like that. You're forgetting the name of the
puja at
festival.
home, but I just forgot the name.
Okay, nonetheless, I think I do have the margin figure as well.
How much is it?
It's actually coming at 11.6%, which is lower than expected. And I think that is the reason the stock has actually reversed its course. Vinay, not about Titan specifically, but consumer discretionary as a whole. We have all been hearing about this premiumization, this affluent India. Do you think it will actually convert into spends and then higher, revenue growth for these companies?
It's actually happening as we speak, because you look at consumer discretionary companies, or in fact, you look at retailers. Whoever is focused on urban India and more of the affluent segment of the market is actually doing very well, whereas businesses which are focused on rural India or less affluent or the budget segment of the market are actually suffering. Look at car sales, for example. The budget cars are not selling, but the more premium end SUVs, the sedans, the luxury cars are selling very well. So I think that's a trend which we are seeing across the length and breadth of consumption. And that's a trend which might continue for a longer period of time, for the simple reason the per capita income is going up sharply, and the discretionary component is going up at a much faster pace.
Follow-up question on that one. See, up till now, Titan, even now, 60, 75, 60, 70 time forward kind of multiple they command, giant lions market share in jewelry retail, but they are getting some good competition as the regional players. Look at Senco Gold. Some of the most marqueest fund managers have bet on it, right? Look at Kalyan. People are not ready to give it a chance and sample it. And when I say people, I mean a lot of fund managers coming out of South, aiming to become a pan-India play. But it appears that it is getting partly reflected in numbers and in valuations. Those attempts of becoming a pan-India play and replicate the Titan story coming similar to that, would you buy that argument, or would you stay? Because over there the growth versus valuation is relatively lower, right? They're still 20, 25 times or even lower. Senco offering was 15 times, right? Just for example purposes.
Yeah, in my experience, Ajay, it's always better to buy a company for its own worth and not that it will be the next something. There is never the next something. The bellwether always remains the bellwether.
Tell me about the real estate sector then. That's coming out of a slumber as well, Vinay. Would you buy that momentum and that trend?
Sorry, I was not able to hear your question.
Real estate sector, because that's coming out of a bit of a hiatus as well.
Sure. I think real estate has been the torchbearer of growth for the last 2 years. Extremely strong numbers, especially on the residential real estate side across the length and breadth of the country. And in fact, a lot of ancillary sectors to real estate are also doing very well. So I think that trend continues. In fact, the luxury segment of the real estate is doing far better than the budget segment. And once again, that continues with the discussion which we had just a while back now. And we expect this trend to continue. The sector is likely to do well. and even the ancillary sectors which are related to residential real estate should do well. So we are very optimistic on this sector per se.
Before I let you go, just one quick question. One big overweight, one big underweight in terms of sectors?
Sure. So we are significantly overweight the healthcare sector and the financial sector. Within healthcare, we are overweight hospitals. Within financials, we are overweight NBFC and private banks. And in terms of underweight, we are underweight the IT sector and we are underweight industrial sector.
Vinay, good chatting. We should chat often now. You came after a long time. Good to see you in your new role as well, by the way.
Thank you.
So let's take a
Thank
short
you. Nice
break
to be
on
here.
that note.